Let's break down today's market session using three key charts: SPY, QQQ, and the 10-year Treasury yield, TNX. At first glance, today looks calm, but when you line up equities with bond yields, the picture becomes much more nuanced. This is a market that's still moving, but without conviction. Let's go step by step. Starting with SPY. Today's price action shows a very controlled session. We saw an early attempt to push higher, followed by hesitation and sideways movement. What's important here is what did not happen. No aggressive selling, no breakout above recent highs, no follow-through after the initial push. Every time SPY tried to extend higher, buyers slowed down. This tells us that demand is present but not urgent. From a structure standpoint, SPY remains above short-term support, below key resistance, stuck in a tight range. This is typical behavior when positioning is already heavy, traders are waiting for a macro catalyst, and risk is being managed very carefully. In simple terms, SPY is stable but not trending.
Now let's move to QQQ, and this is where the tone slightly changes. Compared to SPY, QQQ looks weaker today. We saw selling pressure earlier in the session, followed by a modest bounce, but no real recovery. Key observations: tech failed to regain momentum. Bounces were sold quickly. Price struggled to reclaim intraday highs. This tells us that risk appetite inside tech is cooling. When markets are confident, QQQ usually leads. Dips are bought aggressively. Today, we saw the opposite: more caution, faster profit-taking, less willingness to hold positions. This doesn't signal a crash, but it does signal a shift from momentum to defense.
Now, the most important chart today, TNX. The 10-year yield is moving higher again, pushing toward the upper end of the recent range. This matters because rising yields tighten financial conditions. Higher yields pressure valuations. Tech is especially sensitive to this move. What's key today: yields are not collapsing. They are slowly grinding higher. There is no relief signal coming from bonds. This explains today's equity behavior perfectly. SPY holds but can't break out. QQQ struggles and underperforms. Risk-taking remains limited. As long as TNX stays elevated, upside in equities remains capped. From a news perspective, today fits the broader narrative we've seen recently. Markets are digesting higher-for-longer rate expectations. There is caution ahead of upcoming macro data. Traders are reducing exposure rather than adding aggressively. No major bullish catalyst appeared today, and without one, markets default to range trading and caution. Let's wrap it up. SPY holding ground but no breakout. QQQ weaker tone, tech losing momentum. TNX yields rising, pressure remains. This is not panic, but it's also not a setup for a strong rally. The market is telling us one thing clearly: patience matters more than aggression right now. Until yields change direction or a clear catalyst appears, expect more chop, rotation, and hesitation.